Hello, everyone. My name is Rachel Smith. I'm the Client Service Coordinator at GuideSpring Wealth Strategies. We want to thank you for listening in on our webinar today. This webinar is titled Small Business Pitfalls and How to Avoid Them. This is based on a presentation that Nathan gave at the Six Figure Success Club here in Fort Collins. If you want more information about that and upcoming speaking engagements, please go ahead and reach out to us. So next, I would like to introduce Nathan Wilson. Nathan is the CEO of GuideSpring Wealth Strategies. As a director of GuideSpring, Nathan works with clients to understand their goals and design custom strategies to best fit their needs. Nathan has 18 years of professional experience as a financial advisor and 26 years as a successful entrepreneur. At 15 years old, Nathan started his first business, financially independent from his parents at 16, and paid for his own college with no student loans, earning a bachelor's in business administration and a bachelor's in economics. Upon graduation, he sold his business and went to work for a Wall Street-based investment firm, where he built a successful practice of vice president of investments. Disenchanted with the unethical practices of Wall Street, he sold his practice at age 23 and officially retired from corporate America. In 2007, he founded GuideSpring Wealth Strategies to provide sound advice to Main Street Americans on retirement and income tax-free strategies. Nathan has the following licenses: Series 65, as well as insurance, including life, long-term care, and annuities. He also holds the following designations: Certified Tax Specialist and Certified Estate and Trust Specialist. Nathan lives in the Colorado Mountains with his wife and 2 children and enjoys the solitude of fly fishing and skiing. So I will go ahead and pass the mic off to Nathan Wilson.
Thank you for joining us here. We're going to start with the question, why pitfalls? The reason why we start with pitfalls is there are many on the way to success in entrepreneurship. And so some of those pitfalls we're going to discuss is not beginning with the end in mind, underselling your time / not saving for the future, and thinking you have to do this alone. Since this is a re-recording from a live presentation, we won't have the questions and closing remarks. So ask yourself, what is unique about my business? Some time ago, there was a vernacular or a phrase that was, what is your elevator pitch? If you were in an elevator riding up a couple of floors with a total stranger and they said, what do you do for a living? Or what does your business specialize in? You should have a response that's very fluid, top of mind, and clearly articulates what makes you unique, especially compared to the others that do what you do in your competitive marketplace. To give you an example, if somebody was to ask me as the CEO of GuideSpring Wealth Strategies, hey, what do you do? I'm going to respond with, I protect assets and income from the theft of taxation. And then there's just this pause. If you notice, I have the cadence down of how I say that. The word theft, I hang a little bit, of taxation, I end there, because a unique selling proposition or an elevator pitch should solicit a question from the person that is the listener. In my phrase, really, how do you do that? Or, yeah, I really hate having to file taxes and pay so much in taxes. Tell me more. That's really what you're looking for there. What you want to avoid is common phrases like, I'm a tradesperson. Go into what makes you unique as a trade person, but don't just generically categorize yourself. So with that, we kind of go into the pitfall of not beginning with the end in mind. So look, as a small business owner, as an entrepreneur, we are a different breed. We are comfortable with taking risks, and we're comfortable of working without a safety net, to put it quite frankly. So if you are completely successful, and you have a 30-plus year career of being self-employed as an entrepreneur, the end is retirement, and that should be a successful end that you begin with. However, there's a lot of businesses that get knocked out, mid-race. A third of businesses are only left after the 10-year mark. That means 2/3 failed. But yet our economy in America, 99% of them, of the U.S. businesses are considered small business. So we're the backbone of the economy. The trick is to pay attention to the pitfalls and to have a plan. And therein lies our first quote, Mike Tyson, everybody has a plan until they get punched in the face. And so, yeah, we just got to really talk about the pitfalls because that's what they are sometimes, is a punch in the face. So how do we start with the end in mind? The main thing is to establish your vision. You know, what gets you up in the morning and stays you motivated? Share your vision. Make it a public situation, something you share with your friends about what your vision is. You know, stay in touch and live with intention. The vision is what keeps you going through the change cycle. When we begin a change, we have kind of this first step is uninformed optimism. You know, hey, this is a great idea. Let's run down this road. Let's do this. Let's do that. It's going to, you know, be super profitable. It's going to revolutionize our business. And then the next step is informed pessimism. Informed pessimism is obviously where you start to doubt that grandiose idea. And maybe somebody on your team, an important person on your team, is saying, hey, have you considered this? Or this is a reason why this may not work. And that's why the middle step there is the valley of despair. That's when you start second guessing the change that you're wanting to implement. That's when you forget all the optimism. And you want to revert back to the way things were, which is before you realize that changes need to be made. So the way things are is not a good place to be. That's why you want change. And so to get through the valley of despair, you've got to really look at your vision. You know, to give you an example of beginning with the end in mind, you know, I kind of reference back to the bio that Rachel started this webinar with, and I kind of laugh about bios because bios and resumes exemplify your strengths and eliminate your weaknesses. So she's reading all these things like, you know, started a business at 15 and so on and so forth. And I don't remember those landmark events as grandiose and golden as they looking backwards. A lot of times they were hard periods, and the success came after going through some pretty rough stuff. And that's really where these pitfalls are. So I'm going to share with you kind of my personal experience because you can learn from some of the pitfalls that I encountered. So beginning with the end in mind, I had a bounce house business at 15. You know, the rooms that you blow up in the back of the backyard and kids get in and jump on them, bounce houses, you know. So I would take these around to birthday parties. And my very first business, my very first entrepreneurial endeavor was so cleanly set with beginning with the end in mind and the membership mentality because I was 15. I had the same dreams that every 15-year-old had, you know, leave their hometown, go to college somewhere far away and go to work somewhere farther away. You know, it's just the nature of life. And so I didn't go into this business in my hometown at 15 thinking I'm going to run this thing for 15 years. I was thinking I was going to run this thing till college. So I developed a membership mentality and I began with the end in mind. How much do I have to work to be successful? And then not anymore. And so in the nature of my business, people have birthday parties. So if little Sam Jones has a birthday party on April 26th, guess what I did the following year? On February 26th, I call Sam Jones' mom and I say, hey, Sam's having a birthday on April 26th. So why don't we go ahead and get his party scheduled? And that's ultimately what helped me sell that business was I had all these calendars from previous years showing all my past clients. I developed that membership mentality and I began with the end in mind. And that's really how you have a plan for the unexpected. The pitfall of underselling your time, this is a big one. We're going to go through a case example on this where we can really tack down mathematically what your time is worth and whether you're underselling it. So you really define that value proposition. And so the case example we're going to give with permission is a good friend of mine, and his name is Mike, and he runs All Good Woodworking. They install cabinets. When you order Home Depot kitchens, you know, they subcontract that out to companies like Mike's where they go in and actually demo the old kitchen and put in the new one. And so, at first when I asked Mike, what do you do? He said, I'm a carpenter. And that's the wrong answer. I mean, that could be the trade, but that's not what you do. What you do is you bring an old kitchen to life. You bring a new kitchen into being. You make the dream kitchen that's been in your mind's eye for the past 10 years be real. That's what you're selling. The fact that you install those cabinets using carpentry is just the how. But the what is making that kitchen a reality. And so you've got to really tack down your value proposition, because that's how you get to your price as well. You need to count your salary as an expense. That's a rookie mistake on entrepreneurism is the business owner lives off of what the company has left over. No. You put in a salary just like you do for the rest of your employees. I can tell you the IRS looks at it this way. They look at it as you wear two hats as the business owner. You're the business owner, that's one hat, and you're an employee, that's the other hat. And they specifically require you to take a salary and pay yourself W-2 wages as an employee. And so you got to put all these things in there and know your break-even point mathematically. How much do you have to make to pay your bills? That's what we call break-even. And then you got to factor in not selling 100% of your time. So, when I asked Mike how many hours you want to work in a week, he's comfortable with 60. Well, you need to price your per hour rate on a 40-hour work week, because that's what you're selling to your clients, but that other 20 is working on the business, not in the business. And then the other mathematical thing, if you know your break-even point, is knowing when to hire. Knowing when to hire is a fairly easy step because it comes down to that hourly rate. If the business owner's hourly rate as a business owner, for Mike's example, is $90 an hour, well, as a craftsman, a carpenter, it's $40 an hour. So if he's doing carpentry at 40, then he's losing 20 an hour because he's not being a business owner, right? So hiring a carpenter at 40 an hour isn't necessarily extra overhead if simultaneously Mike, as the business owner, is reallocating those hours he would have spent doing carpentry on being the CEO of the company, because he's billing higher than the carpenter. So he's making the extra by hiring another staff member. So that's when you know when to hire. When I was growing up, as an entrepreneur, I actually did kind of listen to a lot of business audios. Back in the day, there were cassette tapes, that you got in this big plastic folder, and you had 12 cassette tapes kind of embedded into the molding of the folder, And one of the guys I first listened to was Zig Ziglar, like the original motivational speaker. And he had this great phrase he'd use all the time: you can have everything in life you want if you'll just help other people get what they want. And that's really what profit is your profit isn't being a greedy capitalist or a bad person. It is a byproduct of you helping lots of other people get what they want. So it should be a win-win situation. So underselling your time, where does your complimentary time end? You've got to train your clients. And by definition, a client is somebody that pays you. By the same definition, a prospect is somebody that is not yet a client, meaning they're not yet paying you. So we all like to get new clients, but we got to be wary of the prospect that stays a prospect too long and doesn't convert to either deciding that they're not going to use us or they're going to become a client. So where does your complimentary time end? At GuideSpring, we're very specific on that. We do kind of a complimentary phone call, and then we kind of do a complimentary meeting where we're gathering information, and then they pay us a small consulting, hour, just 1 hour of our time, even at a discounted rate, for us to bring back a proposal and a needs analysis, kind of articulating the value that we could bring to them, the money that we could put in their pocket for them hiring us to go get them that money to put in their pocket. And so we're very clear on where our complimentary time ends. You need to do the same in your craft. Put clients who pay you first. The clients that pay you have pre-bought your time. And that moves into charging friends and family. A lot of rookie mistakes in entrepreneurism is not charging friends and family. But this backfires on you and your friends and family. And here's why. Revert to the bullet above us. You put clients who pay you first. And so if you're discounting or working for free for friends and family, you morally and ethically to your clients have to put the clients that pay you ahead of the discounted or free work for the friends and family. This means friends and family are getting your B- or your D+ work in service offering. And aren't those the people that you love the most? You want to give them A+ work. And to give them A+ work, they need to be at the top of your calendar and your priority list by being a client that pays for those services. And as a business owner, it's not all your money. You have to pay your employees, and you have to pay your landlord, and you have to pay your utility companies. And that's why we charge. And those fees are the same whether we have friends, family, or total strangers that we do business with. So how are you servicing your existing clients? You need to keep that in mind. Rachel introduced my bio and said I like to fish, and that's kind of true. But right now I'm kind of on a break from fishing. Been about a 6-month break. Fishing and I had a disagreement. I would look at fishing as an activity that I would get dressed up and go hike in a river, as I call fishing, hiking in a river, and I'd pay attention to the scenery and enjoy nature and enjoy being out by myself and away from my technology. And the fact that I had a fishing pole in my hand was just a byproduct. It could have been a camera, for all I care. But it was a fishing rod. And then I'd come home after being away from the family all day, and what's the first question my wife would ask? How many did you catch? See, the whole measurement of a fishing trip is success is how many did you catch, right? That's profit. In a business world, that is profit. Profit is not a 4-letter word. Just like how much did you catch shouldn't be a bad expression. And I was tired of answering none, and after about 4 trips of that, of coming back empty-handed, that's when I decided to go on a break from fishing. But switching gears to business, the byproduct of business and the success of it, the measurement is profit. And that is a word you shouldn't be scared of. Our clients at GuideSpring want us to be profitable. This really solidified my personal vision that gets me through the rough periods, is knowing that we take care of our clients better than any of our competitors do. We specialize in tax-free strategies and protecting assets from the theft of taxation and creating income tax-free income streams in retirement. And we haven't found anybody in our community or town that does that to the level we do it. And so, during the hard times when it may look that, when GuideSpring was new, and it may look that it may not make the cut of survival, that hit me between the eyes, usually late at night, and stole my sleep. If I go out of business, the concern isn't me or my family. It's what are my clients going to do? And who's going to take care of them? Or more importantly, who's not going to be taking care of them, right? And so I realized early on that my clients want GuideSpring to be profitable, because that means we stay in business to be able to service them. So keep that in mind when you're pricing your time. All right, let's talk some numbers. So we're going to get into case design here. If you're on an audio, you can email us and we will give you this worksheet example. If you're on the webinar digitally here, we're going to go through some math. So this is what I actually talked with Mike as my example with permission is case study. So here's the worksheet example. I asked Mike, hey, what are you billing your clients? And he said, what is your company's hourly rate? He said $90. And I said, okay, how much is your rate if you are performing the craft as a carpenter? And he said 40. Okay, so he bills 90 and his money is 40. Now, I asked him, did that include taxes? Because that's another mistake, is looking at what you need to live on personally, but you got to factor in the government is stealing some of your money off the top. But in this case, 40 he was comfortable with, and that would cover his taxes. So then I said, well, how many employees do you have? And he's got 2, and they're at 18 an hour. So that's where we get to 36, 18 an hour, 2 people working the same hours, 36. But that's not his hard cost, because he's got to match their FICA, their Social Security Medicare example in the tax code. So he's got to match that, and that's 7.65%. So $36, grossing up that 7.65% is now $38.75. That's his true cost for having 2 employees at 18 an hour, right? So then we looked at his profit and loss statement, and we figured out his fixed expenses of his company, rent, utilities, gas, so on and so forth, is $27,000. And then I said, well, wait, Mike, you don't work 52 weeks a year. Even if you wanted to, you don't. We take a week and go fishing, so there's one. Nobody's probably calling and booking you during Christmas. There's two. Thanksgiving, there's three. New Year's, there's four. So we took four weeks off of 52-week calendar, and we got it to 48. And then again, he can't bill 100% of his time, which was 60 an hour. So in this example, we've got 48 weeks times 40 hours a week of billable hours. That comes to 1,920 hours in a year. Dividing that into his fixed expenses of 27,000 comes down to his fixed expenses per billable hour is now $14.36. Okay, so here we go. Let's add this together. Mike's hourly rate is 40 as a tradesperson. His employees' cost is $38.75. His fixed hourly costs are $14.36. So now we get to his hourly break even is $93.11. Now let's rewind to the beginning. Mike, what is your company's hourly rate? $90. But your break even is $93.11. See how that works, guys? That's very important because now it shows that he's losing $3 an hour. And I said, so at the conclusion here is look, you're as a carpenter, you can make 40 an hour and not take the risk you're taking as a business owner. So if you're going to put that business owner hat on, you need to talk about profit, which we established is 20 an hour. And so when we add the 20 an hour on that break even in 93.11, his new hourly rate is 113. So, some of you in the audience here are probably saying, well, wait a minute, he can't just raise his rates like that. He can't bill his rates like that. The market won't support that. Or in Mike's case, he thought the rest of the market was billing 90, and that's why he's billing 90. And, will they pay 113? Yes, they will. Go back to your value proposition, and here's why. Because those carpenters that he generically classified himself with, in reality, start a project, work for 2 days, make a mess, and then they disappear for 3 weeks. You know these people. You've hired these people before, and they don't return their phone calls, they don't return their texts, and then they show up and they work two more days, promising they'll finish, and then they disappear for 3 weeks, right? That's the $90 an hour people. Mike can charge 113, and the market will support it because his value proposition is, I come in here, I demo that kitchen, I put the new kitchen in place, and I start and stop this project at the same time. We're here every day until it's finished, and you're satisfied. And that's what the customer wants, and that's what the customer will pay for. And so 113 is that example. So raise your hand if you want to retire wealthy in 25 years. How many of you have a plan to retire? If a plan isn't in writing and read often, it is not a plan. It is a wish. The pitfall of not saving for the future. If you don't get knocked out of being a self-employed owner before the end is retiring. So retiring is beginning with the end in mind. The average person has 45 years of work and 35 years of retirement. You need to be making enough money during those 45 years of work to cover those 35 years of retirement. And it pains me when people say, I just don't have enough to save, because it goes back to the previous example. You need to price your time right, allocate your time right, put your customers first, share your vision, and service your existing clients with a membership mentality. You should be profiting enough to be able to save. Why save? Taxes. You owe quarterly taxes. The easiest way that we figured out to get ahead of this, because this would always bite us in the butt. We would save, we would think we were doing good, and then all of a sudden our accountant would say, well, you owe all this money in taxes. And then the IRS would just steal my hard-earned bank account, right? The way we figured that out is you need to operate your business on 75% of what comes in and put the other 25 in a reserve account that you don't tap unless it's an absolute emergency. Then you loan the money to your company, and your company pays the loan back to the reserve account. Literally, if you're in commissions, you're a mortgage broker and you close a case and you get a commission, you put 75% in your operating account, 25% in your reserve account. You're a tradesperson, you just did a work order and closed out a job and they paid their invoice. You put 75% in your operating account and 25% in the reserves, and you learn to live like that. That covers you for when somebody punches you in the face, and it covers you when you have some taxes that are due, and it keeps your money liquid. The example I had in Texas is I thought I was doing good by saving. I was paying down my house, like they tell you to do, right? And then I was putting money in a Roth, free from taxes for retirement. But when I needed to move GuideSpring from Texas to Colorado, I didn't have any liquid money. I mean, the IRS says I couldn't get money out of the Roth, so that a 10% penalty tax, and then I couldn't get it back in, when I wanted to pay it back. And the bank said I couldn't get money out of my house because there was some law in Texas at the time where you couldn't get a home equity line of credit if you were self-employed. So I learned that not having liquid money is a very critical mistake, and to make sure you always have that. If you front the business money, have a loan repayment contract with your company. It needs to be in writing. You sign it as the individual, which is loaning the company money, and then you sign it as the owner, which is the company receiving the money, and you put it on your QuickBooks. You want that on your balance sheet, that is a loan, and that loan needs to be repaid back systematically from your company to you, and you can even charge it interest as a tax deduction to your company, but then you pick up the taxable income on the personal side, so it's kind of a wash. But you want to be wary of the phrase, I'm investing in my business. Investing in my business is not investing. It's code language for I don't know how to turn a profit. Your business should be profitable enough to cover its own investment of expansion and to be able to invest in you by you being able to save money for retirement. Investing in your business is something that happens only when you start the business and you get it off the ground and you have a loan payment schedule, or you're kicking in some loans from your reserves account just until some of your latest accounts receivables pay off, and then those loans get paid back. But the practice of investing in your business long-term is non-investing. We're going to close here with talking about your team. If you think it's expensive to hire a professional to do the job, wait until you hire an amateur. This quote is from Red Adair. He's a firefighter. That's his trade, but it's not what he does. His unique selling proposition is I put out fires of oil wells. And when Saddam Hussein set all his oil wells on fire, the U.S. government contracted with him to put them out. And this is his phrase. If you think it's expensive to hire a professional to do the job, wait until you hire an amateur. And you get it, because whatever they paid him, I guarantee you, was a fraction of what was burning up in the sky every minute that those oil wells were on fire. And so this really comes down to your team. You need to hire professionals, because a good professional, a good consultant, should put money in your pocket. Even though you're paying for their time, they should put more money in your pocket than you're paying them, or it's not a win-win situation. And that's our final point, the pitfall of not thinking you're in this alone. It's easy to feel alone as an entrepreneur. Join a community. There's a lot of meetups of entrepreneurs. I mean, the Six-Figure Success Club is comprised of people that are wanting to move from a 5-figure salary in their business to 6 figures, or those that are just newly there and wanting to support their peers. You need to join these communities. Read. If you're not a reader, some of us aren't visual learners. Some of us are auditory learners. Think how much time you're in your car. I know I have a commute, and people sometimes say, well, what a waste of time. My commute's pretty. It's not through traffic, and I enjoy that time. And the reason why is I have an Audible membership. It's like $17 a month, and I get so many audiobooks. And I just play them through my phone into my car stereo, and you can pause, and you can hit little bookmarks where it'll retain that little clip for you to review later. And I pick up a lot of information. Well, who writes nonfiction books? Usually successful consultants that sell their time for hundreds of dollars an hour, and you're getting 6-7 hours of their time on an audiobook for $11. The other thing is SCORE, SCORE. It's all capitalized. SCORE is retired executives and professionals that are giving back their time. You can usually track them down to the Chamber of Commerce or the Small Business Association branch that might be associated with your local college as well. But these are people that give you free mentoring and consulting and offer workshops. Throughout my career, I used SCORE from time to time, definitely when I was starting up through as early as 10 years ago, when I was really developing our model. And they really give you good feedback. So that's a good freebie to start with as well. And then build your team. You have to have a payroll company. It just scares me to death when entrepreneurs say, oh, well, we're just doing payroll through QuickBooks, or our accountant is holding it and doing it for us. Danger, danger, danger. The worst part of the tax code deals with your 941s and withholding of employee taxes and the immediate remittance of those taxes to the IRS. It is their lifeblood, and they protect their lifeblood. There's no tax code more dangerous and all-encompassing of mismanaging payroll taxes and the ability of them to shut you down and own everything you have, and you can't file bankruptcy to get out of it. So for $50 a month or $100 a month, a payroll company will process your payroll, do the compliance, file the quarterly 941s, and protect you for very low amounts of money. This is not where you want to be penny pinching. You need a payroll company. You also need a CPA, the kind that meets with you quarterly and talks about the year you're in, not just files the year that's passed. You need an attorney. If you think an attorney is expensive to draw up a contract between you and your employees that protect both parties, or you and your vendors, or you and your clients, try finding an attorney how expensive they are after you have a problem in those areas and you don't have those legal agreements. You need those up front. Have a financial advisor that's not just the guys that peddle investments, but can actually advise you on your business, your cash flow, your tax strategy. A business coach can be a mentor. Coach is not really a regulated word, so be careful what you get there. But technically, the SCORE individuals that I mentioned earlier are kind of business coaches as well. So they definitely have their role. Just do your due diligence. And then insurance. If you're a parent, you should have life insurance. And if you don't, you should really be embarrassed. You should fix that, because we're all going to leave a legacy behind, and your legacy is going to be one of poverty if you can't afford some life insurance. But now that I'm off my soapbox on that, a greater risk is disability. I mean, we have I think a fourth of employees in the state of Colorado will become disabled. That's a real risk, and it's super cheap to hedge, especially long-term disability if you have your reserves account to meet short-term. And then key man. If you're in a business where you have an employee that if they stepped out, it would shut your show down, maybe they're your compliance person or your operations person, you can get disability on them that pays the company if they became disabled and couldn't show up to work. So you could hire some help to run the show. And you could also buy key man insurance on them as well, which can turn into a benefit at their retirement, because you can give that paid insurance policy to them as kind of a retirement perk. And so, you definitely want to have your team. And then keep in mind, your team doesn't have to be huge in the employee realm. You can have vendors, you can have contractors, you can have consultants, and they all help you do what you do, even if they're not just a strictly employee. So I end with the last quote here from Henry Ford. When everything seems to be going against you, remember that an airplane takes off against the wind, not with it. So this kind of brings us full circle back to my bio. Those success points came after some major headwinds, some major blocks, some major walls in my way that I had to figure out how to go around, under, or through. That's the wind, and embrace those adversarial moments, those challenges. Rely on your vision and figure out a way to get through it, and really eliminate that kind of thinking that says, oh, that just can't be done. Or, people just don't do it that way. Because usually a good entrepreneur, after hearing it can't be done that way, smiles, gets maybe a little bit of goosebumps with excitement, and says, watch me. Because that's what entrepreneurship is all about. I hope you enjoyed this. I'd appreciate your comments, feedback. You can give us some, emails or whatever the case, or calls. If there's anything I can do to help any of you, I definitely love the entrepreneur, and I love supporting them whenever possible. Reach out to us. I hope this was a good talk for you today, and I hope you have a good rest of your day. Take care.